The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. It's nighttime here in Asia. Good morning to you in the U.S. Let's take a look at the XLE really quick here. Got a new reason I'm pulling it up is, crude oil had a nice bounce off 55 yesterday, 55.04, like we were kind of foretelling a little bit there. And in the same type manner, we had a profile lock-in on our XLE, which, as you know, if you follow this show, we always kind of talk about trading the XLE possibly rather than crude oil. A little bit safer situation and showing a relative strength trade, as you can see, building cause, as Tom would say here, and a profile down below. Now on their daily with that unfair high at 80.87, all this is given to you in the scanner, all these levels, inflection points, if you will. So that's a very bullish sign in itself on the XLE. And remember, those are the internals of the XLE driving that. Let's take a look at crude oil really quick. And we're going to pull up the XLE in just a second. Let's take a look at the May contract in crude oil. As we look at this, we talked yesterday. This was kind of where we were at yesterday, right on the bottom here, 55.04, and we were starting to put this show together yesterday morning. And we talked about, you got to still buy the dip on crude oil, in my opinion. We're kind of up here in the ether above the weeklies, above the dailies. And what did we reach a high of yesterday? 57.17. So it had a nice $2 move back in the fair auction, kind of rattling around on the 240s. But I want to show you the dailies. This is the crude oil daily situation. We don't have to come back and hit this inflection point. We've got that 53.67 on the weekly sitting here, and here that is. I'll pull this up and just show you the long-term view. We've kind of had the worm turn a little bit here, so might want to look at this as kind of a gathering action on the daily and on the 240s for sure. We may move higher, and the good news is you know where to put the stops. You've got that 53.67 on the long term, and then you've got the 55 on the 240s, and looks a little scary for shorts there. I will say that. Let's take a look at the XLF really quick. This is something, we had a pretty good bounce in the market. We've talked about that DMZ between 24.28 and 24.47. That's holding. I like the way this is looking. I still like the short with stops above 24.50 on this. As we look across the board, we're going to look at the S&Ps, and this was one that I wasn't a huge fan of buying the dip on this. And let me get this up here really quick. This is kind of the market that's lagging other global markets, if you will, right now. But, we came down in that DMZ 2063 to 2068. We talked about that being the targets as the breadth had changed and rolled over. And we talked about not buying this dip, but we also talked about trying to find some areas to short. Yesterday, we talked about, just so you know, this 2090, 91 area, trying to leverage off this. Well, that just kind of blew through that. After we had gathered ourselves, I thought we may kind of come back and relax and retest 2068, but the U.S. stock market, again, wins. And I got to look at these technicals now. I'm going to pull up our scanner. I'm looking at the breadth. I'm still not a believer in the move up. And, the good news is we played stops above 2090, 2091, take your medicine. There wasn't a lot of reason to get back in the short trade. So it's kind of drifting higher without me personally on the long side. That's okay. I still feel like the risk is to be long, but to be honest with you, looking at this weekly now, this is looking scary for shorts, and there's not a lot of reasons to step in on a long-term basis. We were kind of nibbling on this 240s, but looking at this, wait for some new inflection points, wait for some on the long term, wait for some confirmations on the shorter term to get short, and right now you just don't have anything to cling on to there. So, and again, we've got a little bit of a mixed bag still here. I know the market's going to open. The dailies are probably going to flip over a little bit. And tomorrow, by the way, while I'm thinking about this, we're going to have one of our programmers on. We're going to talk about the new heat map that is going into this. Let me just go in here and choose some instruments so you're not looking at a blank screen. That'd be kind of nice. This is our desktop version. We call it Scanner Plus. Going to get this out to TFNN users. It's got the paragraphs. It's got the breadth paragraphs. It's got a lot of features, a lot of different sorting features. And now you're going to have a heat map here to look at sectors. So what this is going to do is you're going to basically get a heat map of the ETFs. This has been something that people have been asking for a while. So you'll have a heat map of, we're going to start out with the household name ETFs. We're going to keep adding ETFs, but you're going to have like a heat map to drill down into, look at and it resorts. The ETFs will be kind of strength to weakness, and you'll be able to drill into those and look at the internals and try to find out what might be the most attractive situations while drilling down into the ETFs itself. All right, we got some earnings, obviously, going on right now, and quite a few of them. Still got some banks coming out. The U.S. JP Morgan's coming out. Let's just take a look at that really quick on the first segment here. All right, so as we look at this, not yet, kind of waiting on JP Morgan. Here's the weekly, a little bit stronger in that XLF situation. And as we look at the daily, had a new profile up here, but we don't want to do anything yet. We just want to kind of remember the inflection points that are in the scanner, 63.55, 62.29. As we look at JP Morgan, we're going to take a look also at some things that are not near and dear to my heart, but some things that have been on the radar screen we've been talking about. Even as the Shanghai pulled back, kind of had that outside day, not a big fan of shorting it, proved itself to be the case again today. And as we look at the 240s, we found support on the inflection points again. That was we talked about waiting until we pull back into the 41.68 area, and we hit, let's just see, what is this? Low is 41.88. So very close to that neighborhood, and then we kind of plowed back up again. And Joey coined it the best. These things, when they start moving north, do not stand in their way. Okay, let's take a look at the DAX really quick as we're just kind of flowing through the global situation here. I was a big fan of trying to leverage off 12,000. Blew through that. That's what stops are for. And we're going to have to sit tight now because we're right in the middle of a fair auction and just kind of on the long term, the same situation. The short term inflection points on the DAX right now, as you can see, we almost climbed the whole 240 fair auction into 12,127. What do you do with it now? I don't think you can short it till we get back down and try to breach that 12,000 area again, namely 11,981. A close below there would be good. A little bit of a key reversal wouldn't help here, but I got to sit tight on that. Not a big fan of getting long the DAX really in a large way, but here's the euro and relative talks with the DAX. Again, we'd love to have a close below this 107.02 area that we talked about. This hasn't happened yet. Love to see it close below, go back and retest that area to just kind of continue to drift south. It's the possibility of that happening. But again, you want the probabilities in your favor there. We're right at the inflection point, trading 107.05 right now. So again, stops oriented around that particular inflection point on the daily unfair lows. Okay, we're going to go into a couple of stocks that I've been looking at while the market's been possibly falsely drifting up here. Facebook, again, here's the weekly. We had the power move up against above 79.27 the other last month. Came back and almost retested. This is not a short, folks. Is it a buy? Let's take a look at the next time frame down. You got resistance at 83.49 right now, and any breakdowns below. I'm going to say 79.27 is all you get to hope for there. These are just going to be noise moves above this weekly. So again, is it a buy? I think you got to buy breakouts above 83.49. And there's the other inflection point, 81.93 there. Here's the 240s on Facebook. If you're day trading it, 82.80 is going to be support there. So that's the story on Facebook. If you look at, let's see, what is this officially called? Stock Twits. Why did I forget that? You'll find some decent little plays in here. And I'm going to pull it up. I'm just going to drag it in front of my screen here. If you've never been here, it's just a neat little heat map type looking thing that we're putting a somewhat similar version of this in the scanner now. It's not going to be like this. It's going to be more cool, more informative. Go to healthcare. You'll find the wackiest, craziest stuff here. And some people like this. If you don't know what this is the social media chatter kings of the hill. MNKD. We had that up a long time ago. You know, mostly you can get great shorts off of this particular screen. To get the people who are chatting it up pretty hard. Put your stops in. A lot of these stocks are flavor of the weeks type things, and some of them, you know, GILD, obviously there's some decent stocks up here, but a lot of the ones that are El Cheapies that just kind of do the triple double thing and then fall off the wagon, you can get some good ideas out of this, especially out of the healthcare scene. But as we look at this, you know, you can, again, technology, Apple's always one of the main ones, Twitter, Facebook, IBM, Microsoft, Yahoo, Plug seems to always be in there. BlackBerry, don't know why. But let's take a look at IBM. We kind of want to see how this thing is acted in a drift up here. Here's the weekly. I've been a big fan of waiting patiently to short this thing below 160.55. It hasn't happened. Powered up. Last leverage point was 164.29 on the intermediate to short. That's over. Plowed through that. So right now it's a wait and see on the international business machines. IBM. Not in the short camp on the long term right now. Let's take a look at Twitter. See how these are acting in the S&P move up. You know, here's a situation that, you know, we got above the profile. We started kind of churning above. Stops got to be below 50.01 on this particular stock right now on the long side. And it looks like we might be clearing some of this. Now, the S&Ps, I've stated that we're going to come right back. I hear the music. We'll be right back, folks.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. I'm looking at Mattel right now. This is our weekly view. If you kind of go back in time since the 40s, the price of the stock 40, not the 1940s. 2642, we kind of breached this weekly unfair high. Now we come back and retest, and it looks like we're kind of hovering above here. This is not a short anymore right now, and we started this process by showing the breakouts happening, first of all, around 2327. So we've had a good move up. Now we're above the weekly profiles, and we are going to have to get back down below 2642 if you even consider shorting this again. So right now, I think the long trade stops below is 2642 right now. Tighten them up a little bit. That's the situation on Mattel. Let's take a look at McDonald's really quick. MCD. My goodness, that's not MCD. That's MCCD. Here we go. All right, so we kind of talked about this one breaking down and going back and retesting the 97.39 area. Now we've got this orange bar that appeared yesterday. We're probably going to have a new profile, so you're going to have some new action on this on McDonald's. Still like this is a short, still like stops above 97.39, but we may have some new profiles up here. We can kind of ratchet down the stops, put a little bit of a lid on this particular situation. Let's take a look at also Tesla, TSLA. My nephew is a big fan of this company, has been a big fan for a long time. Made a lot of money in it. Here's our daily situation right in the middle of a fair auction. Had some emails about this. So the buy points are 200 on this. You got targets above 213 on Tesla. Let's take a look at Netflix. This is something we've been following. Joey kind of put this on the radar. And as we look at this, we just 429 closed above. It's just been, what is that, 150? It's a 150-point move. It's a 33% move, maybe more. So how do you trade this now? What do you do? Here's the 240s. You got support at 555, and resistance, as you can see right now in the short term, at 575. So those are the numbers you got to keep in mind if you're day trading Netflix. Those are the only things you have to hang on to right now. Let's take a look at GoPro, and here we go. Here's the weekly. All right. So now on GoPro, you got resistance at 47.95 and support at 37.93. We may rattle around in here, but breakouts above or below that profile you're going to have to pay attention to. I still feel like this stock can go a lot lower. So on the intermediate, breakdowns below 42.80, 42.81 are going to have to be sold here. Somebody's saying Mattel was founded in 1945. Did not know that. Let's take a look at Halliburton. By V, founded by V, Jimmy Valvano. Just kidding. Here's Halliburton. And, you know, the XLE, you know, this stock kind of broke ranks. First of all, 43.52. We're trading about 4 or 5 points higher than that, which means 10% higher. Here's the weekly situation. It was a nice confluence we got out of on the weeklies and dailies. What do you do with it now? You don't short it. All right, let's take a look at Microsoft. Just going through my notes here. This one, you know, obviously big day, huge day. That's a lot of momentum to get that stock going. You got a little bit of a lid at 43.46, so be prepared if you kind of bought that breakout on the dailies. That's going to be an inflection point you have to pay attention to. Do I think it's going to go higher? Could the market drag it a little bit higher? I'm not a big fan of the market just completely going north here, so I think you got to take some off the table at 43.46. We're going to take another look at, here's DuPont. Sorry about that. Didn't mean to pull it up. This is something that's been coming up in the scanner. Again, stock that really can't get out of its own way here, 73.59. I'm a big fan of shorting it there. And we also had a new weekly profile appear this week above. So you've got unfair lows you got to pay attention to at 73.55. And on the daily, 73.59. So you've got 73.50 area, you've got a decent place to short this, and I would wait patiently for it to go to that area. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. I just want to state some numbers. If you guys want to call in, do any instant analysis here with me, love to hear from you. 877-927-6648. And internationally, 727-445-1044. I think I give those out once a week. They tell me to give them out 3 times a day. So feel free to call in. Here's UPS. A little bit violent reaction yesterday. This is, again, on a long-term basis. You know, we've talked about the 99 area. That's 99, 90, 100. That's where stop's got to be above on a long-term basis. But that rip up yesterday, we got through the 240s, the regulation of the trade down. I'm taking a little bit of a break on this. Had my stops a little tighter than waiting for those daily and weekly inflection points to be breached. So I'm out of UPS right now. Still a weak stock on an intermediate to long-term basis. And that's the way that one goes. Here we go. Here's our profile scanner plus version. Here's our S&Ps. And what I want to do here is just do another sort. I'm going here to our dailies below the box. Only matching results. Here we go. And Avalon Bay still up. Still on the screen here is a weak, relatively weak stock. American Express, AXP. Let's take a look at that one because this one just kind of started creeping onto the screen. AXP. God, I used to hate the specialists down on the floor in the New York Stock Exchange. It was just, the guy should have been in jail. Anyway. Here we go, 78.69. We breached that last week. We're kind of rattling around below this week. I love this thing as a short. It started showing up on the screen again yesterday, 78.21. Obviously, I had some action here because of some news events, and now you've got a lid here, 78.21 into 78.69. Those daily unfair weekly unfair lows, and the scanner right here, right now, shows you that. So moving down the list, Coca-Cola, CCE, we're at the bottom of the box here. We'll take a look at that in a second, just to kind of get an idea where we're at with that. Clorox, interesting here, top and bottom. All right, so let's just go into CCE and then CLX. Let's go into CLX first. CLX. All right, so here we go. Now, obviously not cooperating with the market, kind of drifting higher the last week or, I mean, in the in the move up that I am not really a big fan of on the S&Ps. Clorox has kind of continued to drift down here, and 109.01, top of the box on our weekly. We're starting to get below there now, and now we're getting below the dailies here. So keep this on your radar screen. This is something I'm paying attention to. We may have a trade opportunity here. You could look at this as pulling back into support right now. We're just gonna have to wait and see and wait for a close below that 108.40, 108.50 area. Here's the 240s. Looked a little heavy lately, and I know we're racing for those inflection points, but I'm kind of a big fan of this at least coming down into 102.14. Let's take a look at CCE. Is it CCE? Yeah, here we go. So this is the intermediate. We've been rattling around here on the bottom of our profile. So let's go into the weekly, just kind of see where we're at. Not a lot of direction here. We looked at it on the scanner. I'm just going to call this a no trade. There's not a lot of leverage there. Let's take a look at Best Buy, BBY. This is one that's on the bottom of our weekly. And here we go. So here's the weekly. We're showing this thing looking very, very heavy as the S&Ps are kind of drifting higher. So this is your breakdown area that you're going to be looking for now. 36.49. You're going to have a little bit of market help. That would be nice. 36.49. And this is kind of the way it looks on the intermediate. So that's what we're waiting patiently for, is just to breach that area and close below on a weekly basis. Let's take, we just looked at DuPont DD. I want to kind of revisit that. This is right off the scanner. Here we go. $73.59 and $73.50 on the weekly. We just looked at this. I want to reiterate, as we have a weekly profile appearing above, this is the reason I pulled it back up. You got to be looking at this. That's a very bearish sign on DuPont. You know, some of these stocks are you know, Edison International, EIX. Let's take a look at that one. Here we go. Another stock that's not exactly cooperating, below weeklies now, 63.46. Got to put stops above there. 62.66 at DMZ. That's going to be the resistance area for EIX, Edison International. Let's take a look at FedEx now. That's on the scanner. Here we go. And I'll look at wheat in about 2 seconds here. You know, UPS, the situation there, 170.15 is going to have to be worse. You know, we rallied up into there and pulled back a point or two yesterday. Pre-market, we're trading 169.06. So again, stops above 170.15. I think this stock could go lower even if the market goes higher. Let's go into looking at wheat for just 2 seconds here. What month code do you want on wheat? December wheat or May wheat or RJ? July. Okay. Was asked to look at July wheat. Here's the weekly. Yeah, I mean, if you watch this show, I'm kind of a big fan of these grains pulling back. Here's the pressure point 490.5 approximately. We're trading a little bit above there right now. So you got 49, 49.5 sitting down here too, 490.5. I'd kind of wait until we did a flush below there like you're talking about, but we've got resistance on an intermediate basis on a very thin profile, if you will, around $5, 501.5. That would be a selling point to maybe try there. And then if that didn't work out, stops above. And then, you know, obviously if we never get there and start traversing below 490, that is going to be where some trading opportunities are. All right, while we're here, got to look at November beans. Again, I'm trying to trade this action on the 240s. And as we look at the 240s on November beans, trying to leverage some against 958.5. And then obviously if we can get below, and with stops above, if we can get below 942, 940, I think it could be on for this to get to the $8 and some change range on November beans. Let's take a look at December wheat, or excuse me, December corn. RJ, if you're trading wheat, you know that corn and wheat have some relevance towards each other. Corn's looking just very heavy to me. That could bring wheat down for that flush. You know, wheat, if you traded it, when people start running for the door on that thing, it can move significantly. So Custer's last stance on the December corn is 397. I think we can go lower than that. I think corn could be in the 350 range at some point. We got to take a look at gold really quick while we're on some hard commodities here. No problem. As we look at gold, this has been a little bit non-directional, just right around that 1200. I'm not a big fan of shorting gold. So again, we caught that 1182 area the other day, 1183. We hadn't really reached our targets above of 1215 and 1230. I'm still going to try to stick with that. Trading a little light with stops still below 1182. Trying not to look at this and just have the OCO orders in. And we're going to go back to the scanner now really quick. Fossil, this is a 3 time frame bottom here, as you can see. And you can do filters for this. If I want to come in here and do bottom weekly, bottom daily, bottom 240, here we go. So these are the stocks that are sitting on the cliff. This is why I love this thing. Fossil, Keurig Green Mountain, and Healthcare REIT. So let's take a look at Fossil, FOSL. So as you can see, the weekly on Fossil just not participating whatsoever in this market climb around 81, 86. And on the dailies, you got this 81.67 sitting here. This stock's sick. I could see this doing one of those flushes that we hope wheat does. And we're very near our 240 lows also. So, and pre-market we're trading 81.36. So we're getting down there. In fact, I dare say stops above 81.86. Let's just call it 82 would be in order on Fossil. Let's take a look at the other two, GMCR. Let's take a look at that one. Here we go, Green Mountain. All right, so as we look at this one, yeah, this is ugly. 112.13. If we get below there, there are going to be some people running for the door. That's what you got to have. You got to start having moves below there. This is our daily right at inflection points. Just picking it right out for you from the scanner. Let's take a look at HCN, another dual time frame lineup here. HCN. That's the healthcare REIT. You know, This, I think you got better shorts than this one. This one actually, in my opinion, you kind of traverse down here. It hasn't been the weakest of the week, and that's what kind of concerns me about this one. I think this healthcare REIT is not the one to kind of, write home about on the short side. We may get a little bit of a pop here if the market pops. I mean, there's a lot of people watching this right now. I'm one of them. Keep it on your radar screen. Let's take these sorts off. Let's get back to below the box here, and we want to just kind of keep drifting down. A lot of stocks still just, not participating at all. Southwest Airlines, we're going to take a look at that really quick. This is something that's been on the scanner lately, LUV. Now, the weeklies, obviously very strong, but we started getting below daily profiles. So this is the way I'm looking at this one. If we can get back above 42.92, 43, in my opinion, it's going to be okay to get back in the water on the long side and try to kind of stay in tune with what's going on here on the long term. But, backing up even farther, I'd like to see a new weekly profile up here, and that will give me a little bit more bearing on LUV, so I'm kind of sitting tight on LUV. Mosaic, MOS, let's just take a look at this one. All right, so this one's looking a little bit more riper. We kind of have broken down below that 45.69 area. Here's the daily. We've kind of gone back and retested the 46.34. 6 stock here, and now we're getting below long-term profiles. I know you're saying, well, do we short it in the hole? I think the good news is you can orient stops above that DMZ between 45.70 and 46.35. And I'm looking for this to go lower. It would be great to have some market help on something like this. MetLife, Motorola, MSI, Motorola Solutions. Let's see some other ugly. Pitney Bowes, we looked at that the other day. PBI, that was on the scanner. Let's just see where we're at now. PBI. And starting to get some help here now below 23.41, and the dailies, I love how this looks. I think PBI, Pitney Bowes, could go somewhat lower. Market help would also help this particular situation. Guys, we'll be right back from this next break for our last 4 or 5 minute segment. We'll review some of the indices. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Hi guys, welcome back to the show. We're going to take a look at May Copper really quick. This is I just got an email about this. Again, when you look at these, this is our daily, this is May Copper, this is our 240. Looks like we're kind of going to hell in a handbasket here, but let's kind of back up. Remember, the longer term time frames are always our most powerful. This is the good news on May Copper. Unfair high is at around 2.6833. That's where you can place stops below. I mean, I like this. I like this kind of broken stride it did on the just, downturn it's been in for God knows when. Jesus. Wow. That's ugly. Hadn't looked at this in a while. But as we look at this leverage point here around 2.6833, we always look at constantly, where's the risk? I always, the first thing I think about always is where do I put the stops if I'm wrong? This is pretty cool because we're consolidating above this weekly view. Remember, weekly takes precedence over daily down the line. And I like copper here. I like how it's pulled back. Okay, let's just make sure excuse me, getting stuff here. Okay, so that's the situation on copper. Let's go back into some of the softs here. And we're going to take a look at coffee futures. You could look at coffee as kind of a basing action here. This is our weekly. This is kind of analogous a little bit. This is coffee. I'm sorry. Did I say copper again? Anyway, it's a little bit analogous to copper, except that this is within the fair auction. Copper's above. So what do you do with this now? I mean, I like leveraging against this 133.13 area, stops below, similar type situation as copper. I'm looking for a bounce in it. I don't like how it's consolidated down here on the lows, but I'm willing to take a shot here, and targets above initially about 146.5. And if we can break that on a weekly, we could climb much higher back into that 170 area. Are we good? Loose connection. What does that mean? Palm comes and goes. Not sure what that is. We'll check it out before tomorrow. Get some signs from the homeland, TFNN's brain center there. All right. As we looked at we okay? Okay. As we looked at sorry about that. If you guys are hearing a hum, I apologize for that. Let's take a look at sugar. This is May sugar. Had a little bit of a pullback on this, to say the least. Back into these daily lows at around 1271. We kind of had, started showing some strength in sugar, but this is how I'm looking at sugar. I'm looking at sugar at putting stops below 1224 on a very long-term basis, just maybe taking some more heat if we have to, getting stopped out, targets above 1388 and maybe even higher if we get a weekly close above there. Okay. I don't know if we have time to get into this. I was going to take a look at cocoa. It's a very similar situation to sugar. Got about 5 seconds. Okay, guys, we're going to pick it back up again tomorrow. Stay tuned for Steve Rhodes. Tom O'Brien should be back at his desk tomorrow, so that's going to be a full joy. Stay tuned.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.